Welcoming all viewers through this accounting equation channel. So today I am presenting this class to all my viewers on the dividend yield plus growth in dividend method. So here I am going to solve some extra problem on this method dividend, as I had discussed with you in my preceding fifth video class. That class is based on dividend yield plus growth in dividend method, and continuation of that episode. Here I am presenting one two extra problems on the same screen. There is a questions. The share of XYZ Limited is presently traded at rupees 50, that is market price, and the company is expected to pay dividend of rupees 4 per share with a growth rate expected at 8% per annum. It plans to raise fresh equity share capital. The merchant banker has suggested that an underpricing of rupee 1 is necessary in order to sell the share in the market. If it has been suggested to the company by a merchant banker, they are very expertise in the share issues in the market, and they suggested that the company should reduce rupee 1 in market price per share, that is from 50 to make it 49, and further some miscellaneous expenses are also there for issuing of these new shares, and miscellaneous expenses it is estimated 50 pice per share, which is given here, 50 pice per share on miscellaneous expenses. Then you have to find out the cost of existing equity shares and new equity shares. So when the price is changed from 50 to reducing it 48 to rupees 50 pice, because 1 rupees 50 pice is to be deducted from the market price of rupees 50, then this will become a new price, that is the new price of per equity share, and existing price per equity share is rupees 50, which is also called market price per equity share. Now using these questions in solutions to solve this problem, so this is expected to pay dividend of rupees 4 per share. And another thing is that in both the cases, that is the calculating cost of equity in case of existing shares, and in case of new shares, the dividend per share rupees 4 will remain same, and growth rate in both the cases 8% will remain same. Okay, in existing share, so that is, and now the formula which we have to use, that is given in your preceding lecture class, and where equation number 1 is given the first formula, that is d by mp plus g multiplied by 100, and that formula shall be used in both the cases, existing shares as well as new shares. So here, keeping in mind the formula of the under dividend yield plus growth in dividend method, so market price existing shares 50 rupees and dividend per share 4 rupees, growth rate is 8%. Cost of existing equity shares K equal d by mp plus g into 100. So dividend rupees 4 per share and market price per equity share, and growth rate this one. And when you 4 divided by 50 rupees, then you will get this value 0.08, and 0.08 is already here, growth rate, and plus it, so 0.16 into 100, so 16%. This is the cost of equity. Cost of existing equity share is 16%. Now the same share is to be issued at new price, that is the cost of new equity shares. So now here the cost of new equity shares, so K D by NP net profit. So new equity shares K equal D by NP plus G 100 into 100. So cost of new equity share D by NP plus G. So a new shares price is calculated here, net profits. So market price is 50 minus under price, that is rupees 1, minus miscellaneous expenses, that is 50 paise per share. So here 48 rupees 50 paise, and dividend 4, and growth rate will remain same in both the cases, existing shares and new shares. And this putting these values in the formula here, this is 48.50 net profits, and this is the growth rate, this one. Now this time I have solved this problem by taking the after decimal 4 houses, 0.0825 plus this is the growth rate, this one, and when you add it, so you will get 0.1625 into 100, so this is 16.25%. Okay, so this is the problem, so you write down practice. Now second problems I am solving. So XYZ Limited has just declared and paid a dividend at the rate of 15% on the equity shares of rupees 100 each. The expected future growth rate in dividend is 12%. So G, find out the cost of capital of equity shares given the present market value of the share is 168. So by taking the present market value 168, so we will calculate the cost of equity share under the yield plus growth in dividend method. So this time this is the company has just declared and paid a dividend at the rate 15%. So here the just declared, that is we assume that this is the dividend declared in the last year, and this year the dividend will be increased by 12%. So then D1 shall be used, that is based on equation number 2, which I had explained you in my preceding episode, that is the 5th video class. D0 D1 is explained in detail, so you watch that one and then you watch this episode, so this video class, so then you will understand the things easily. Okay, so here D1, so D0 is the last year dividend, and this is the 15 rupees, and 1 plus G factor, growth factor, this is the 12%, and when you multiplied it, so you will get 16.8 rupees 80 paise. Now this D1 value is 16.80, so here 16.80, and market price is given 168, so here growth rate, put the values here, so divide it, so 16.80 divided by 168, so you will get 0.1 plus, and this is the factor, so G growth factor, so 0.12, and plus it these two figures when you add, so you will get 0.22 multiplied by 100, so 22% cost of equity capital. So dividend amount to be calculated 15% on the face value of shares rupees 100. So 15% of rupees 100, it is a 15 rupees, and it is calculated D0, the last year dividend amount 15 rupees we got. This is a 15% of rupees 100 D0, and this year it will be increased by 12%, so 15 rupees, and if you calculate it directly, so like 15 rupees is the last year dividend, and this year it will be increased by 12%, so into 12% plus it, so it is total 16.8, so that is 16 rupees 80 paise. And here, or you can calculate using this formula also, D1 D0 into 1 plus G, you will get over 16.80. and now here I am given you the 3 problem for your practice. So this one, problem number 1, problem number 2, and problem number 3. So these the 3 problems you must practice, and you in the problem number 1 use the equation number 1 which are explained in fifth preceding class, that is the fifth lecture. And equation number 2, it is also explained in lecture number 5, that is the fifth video. And then equation number 3 is also explained in the same video class. So formula are given, it is explained there. So use under question 1 equation number 1, use equation number 2 under question number 2, and use equation number 3 under question number 3. Then find out the value and you write the answers in the comment section. So I will check and reply the correct answers. So you do not hesitate, you must practice it. These are all important questions. So when you practice this 3 questions, so you will understand the actual thing in details. Okay viewers, so thank you very much. All of you watch, note down in your copy, practice it, and give your answers in comment sections. And more important thing, don't forget to like, subscribe and share this class. Thank you.